All right, folks, welcome back. So, today is the end of the week, Friday, and we had quite a very eventful day today on the NASDAQ. I'll get into details of what I have going on up here. I want to take your attention to this high over here and this low right here. Also pay attention to this as well. So that low is from 2 p.m. yesterday. That's Thursday. So that's that low over there. And between this high, we're right up here, and we had the market rejecting lower for all this sell side liquidity. Now, I was of the opinion that we would rather go up into all this buy side liquidity. That was what I wanted to see. That was what I was anticipating for today, because look at this high and this high. Those are relative equal highs, and that's a very, very smooth edge. The market would rather want to gravitate for this high. That was what I had in my mind. So let's go down to the 15-minute time frame. And on the 15-minute time frame, as a general rule of thumb, something we always used to, or what we always adhere to, is we want to know where that midnight opening price is. And over here, 22,037, that's the midnight opening price right here at this candle. Then this is the ORG low. This ORG low is 614 price from yesterday. That's Thursday. The close of Thursday, 1614. That time is a very, very specific time that you need to be paying more attention to. So you need to go down to a 1 minute time frame to get that 1614 time much more precisely. We had buy side liquidity resting above these highs here. This high, this high. So over there, I'm going to make that blue. So this was buy side liquidity. I'm now going to explain to you why, as price was going beyond this blue line, which is this buy side liquidity. Normally, this was actually where the this is like something the market has to. If the market is going to go up for this buy side liquidity, for instance, it has to take out this high, make effort to take out this high, make effort to take out this high. So how do you get to know that the market is not going to keep on going further? If it's really going to go up for all these highs here, you want to see bullish PDRs forming as price is leaving this buy side liquidity here. But it didn't. It failed and came back into the buy side liquidity. It came back under this line where that initial buy side liquidity was, and started forming a lot of heaviness there. So this buy side So this was that buy side liquidity that was taken, and this was the, let's go to a 5-minute time frame before I go down to that 1-minute time frame. So that shaded area, this shaded area here in orange, this was the inefficiency that price created as it was taking out this buy side liquidity here. So this fair value gap, if price is bullish and it wants to keep going for much more higher prices, we need to see this fair value gap here support price, but it didn't, it failed. We had price dropping and doing what? Closing outside the fair value gap here. That happens, this, notice where all the bodies are stopping. They are stopping below the lower half of the fair value gap. So because it's closing at that lower 50%, look at where, as soon as this came down, we never had bodies going beyond this white area here. It was just weakening to those levels and rejecting. So that, seeing that, already disqualifies the idea of price wanting to keep going higher for higher prices. So this is now acting as an inversion fair value gap, and I'm going to go back down into more details about everything going on inside of that inversion fair value gap using the 1-minute time frame. So we had price, remember we want to see price trade through it. This is price trading through it and using it here now as resistance to trade lower. So the market trades down into the gap, comes back up, trades down, and this time around leaves it completely, then finally comes back to use that same level as resistance. And notice where all the bodies of the candles are stopping. They are stopping below the lower half of this gap. So this is now acting as an inversion fair value gap. So that's a sign of, or that's a bearish signature in price. So 9:30, which is when we are supposed to be engaging with our chart for the model that I've been teaching for quite a while now. So we have this price at 9:30 here. Sorry, I need to. We have this 9:30 opening price here. So this becomes the opening range gap high. Then right here we have the opening range gap low. Now notice what happened. We opened here at 9:30. Price rallies one more time into what? This fair value gap from 9:30. It looks very good to use, but the rules of the model is that you use the second one that forms, not necessarily the second, but the fair value gap that forms after 9:30. It doesn't have to be that 9:30 fair value gap. So sometimes you may want to rush and take a sell from here, and you still, if you don't know what you are doing, you're going to pay for it. So this is the first presentation fair value gap here. What time are we going into that gap? At 9:49, as we're going into the 9:50 to 10:10 macro. So sometimes that macro begins early and it begins to, you see price begin to do or begin to react or behave in the way you expect the market to start behaving algorithmically. Sometimes it happens as early as 9:45. So around that time, we are trading into the first presentation fair value gaps, the fair value gap. Market rejects down, taking out that sell side liquidity we noted from the 4-hour time frame, that short-term low. We broke down below the sell side liquidity pool over here. Market is rallying, but notice how it is refusing to go back above where that sell side liquidity pool was. It's failing to get above this. This was an initial sell side. So price is failing to rally into that level. If it does that, that becomes a more problematic price action. So had it been the way we came down through this liquidity pool, had it been price over here, left it and found some kind of support to keep trading higher. So what happened here is now the opposite of what is happening here. Study what happened here. The way price came back down and failed at this buy side liquidity here, then rallied up, came down. Then look at what happened here. That's because we are bearish. It's still looking for more downside objective, and this was the target here. That low I noted before I came down to the lower time frames. So we had this gap here. As price fails to get above this initial or previous sell side liquidity that has been purged, we had this displacement. Notice how price was stopping inside the gap, broke down one more time and closed outside the gap. Market fails to get above the consequent encroachment, breaks down. We have a breakaway gap here, and even inside that price action we have a fair value gap as well. Breakaway gap, price trades into it, just weaken into it. Came down into that low from Thursday. So we have that inversion fair value gap here. Notice where I was taking my sells. So I was taking my sell as this candle was digging into this up close candle here. So I went in with 2. I took out 1 profit here. Then as price dropped down more, I took out another. That's my last portion. then let the rest right down to that Thursday's low from 2 p.m. So you don't need to get the whole move, you just need something that you can easily just recognize that price is going to do and take advantage of it. So I hope you guys found this one insightful. Have a great day.